To lose patience is to lose the battle. Mahatma Gandhi.
Alright guys, time for portfolio update. In this channel, we show you the real portfolio. Here, no stock tips or any other shortcut way to have long-term return. So what do? We hold good business in our portfolio, and then with the help of this business, we try to create long-term wealth. The secret of creating wealth is very simple. All those companies earn a really good profit, and a portion of that earned profit will be reinvested back in their business. To simply put, the company that we are owning, they are having high ROC with high ROIC. This is the most powerful engine in the world to create wealth, called compounding. But this process is slow, so we keep time. If you are new in this channel, we have a Telegram group. You can join in that group and interact with us and our community members completely free of cost. Without having any further delay, let us start. As we said, it is a real portfolio that you are seeing. The profit, loss, these are real accounting. So let's dive in. The total investment that you have made in this portfolio is nearly 6.84 lakhs. This video was recorded in 7th February 2023. So the valuation as per the closing date is 6.77 lakhs. We are currently in a small amount of loss, which is around 6,000. The benchmark is Nifty. That means the day when we have made this investment in this portfolio, if we would have made the same amount of investment in Nifty 50, this would have been my return. It is 4.7% on CAGR basis. Our portfolio CAGR, including some amount of cash, is around 0.6%. As you can see, we are right now underperforming by 4.1% on a CAGR basis. We have some cash in our portfolio, which is around 36,000 rupees. Those who are following our channel for some time, you will probably know that we started investing in this portfolio since January 2021. Since then, every month we invested a certain amount of money in this portfolio, and we continued this investment style until December 2022. In these 2 years, every month we have made investment. The transaction summary and the whole portfolio are made available to public through the Google Sheet. You can access that completely free of cost. The link is in the description box. Coming to the portfolio stock, you can see that we are owning a total of 10 stocks currently. When we have made our last portfolio update video, you have seen that we had total 11 stock. That means we have sold one stock, and that is Relaxo. Why we sold, we will talk about it. Before that, let's talk about the stocks that we are currently owning. Here is the list of 10 stocks that we own. All the stocks are bought on the first trading day of the month from January 2021 to December 2022. The details of each transaction is here, you can see here. You can also check the same from the Google Sheet. As you can see, in some stock we have profit and in others we have loss. Of course, some are flat as well. Abbott India had shown the highest gain, which is around 22%, and the highest loss we have in Dr. Lal Path, around 39%. We do not believe in profit booking or to sell to cut down the loss. If the business outlook is not favorable, then we will sell a business. Otherwise, not. As you can understand, we see no big concern in Divi's lab or in Dr. Lal Path just because the share price is dropping. All those companies earn high ROCE with high ROIC, and the business outlook is still very strong. So we continue owning these businesses. Now, in the process of investing, we should not fall in love with the stock, because as Peter Lynch famously quoted, the stock does not know that you own it. Anyway, in last couple of months, we have not made any portfolio update video. In case you are interested about our recent transaction, this is here, you can see. From August 2022 onwards, you can see that the details of our all transactions here, including units, their buying price also. I will not go through the details, but you can take a pause and take the full view of the complete transactions here. Now, moving next to the allocation, you can see that we have highest allocation in Asian Paint, nearly 13%, then HDFC Bank, similar allocation, 13%. Pidilite, we have 12% of our portfolio invested, and then PI Industries, 12%. Kotak Mahindra Bank, we have total 9% of our portfolio invested. We are owning Abbott India for a while with allocation 9%. Navin Fluorine was our recent inclusion. The allocation is 8%. And Divi's lab initially had a higher allocation. But the recent decline in the share price has reduced the allocation now to 7%. Then we have Nestle with 6% of allocation, and the last one is Dr. Lal Path with 5% allocation. Here you can see our performance. Since inception, the benchmark has increased by 10.7%, where the portfolio has been in negative 1.6%. If you see the performance in the last 1 year, you will see that we have also underperformed. And overall, the portfolio is also underperforming. You may ask, what gives us the confidence to continue with this portfolio? Simple reason. All these businesses are very good businesses. They're earning profit and doing huge capex in their core business. None of these businesses are losing any money. All of them have stellar track record of earning good profit in a very consistent basis. But the consistent profit will never ensure consistent increment in share price. Over the time, the share price will catch up with the profit, and the decline in the share price will be overcompensated. At least that's what the history says. But it will need the patience and bear the pain period. That is why the investing is tough. Just think about it. If any strategy gives outperformance every single year consistently, then everyone will follow the same strategy, isn't it? And everyone will outperform the market, which will never happen. So we cannot simply chase return. Just because the strategy is giving good return over last few years, you cannot simply chase that strategy, because every strategy will have its testing time. So every strategy will need its own time. So we have to be patient. If this is very clear, let's move to the next. There is a change in the investment style. We are not going to invest in every month the way we have done it before in last 2 years, because the target amount of this portfolio was around 7 lakhs and we are very close to that mark. This is why we are going to make very few transactions here onwards. Just not only that, there is another reason. We will let this portfolio to take self-correction course. What is this? Let's try to understand. If a business is doing well, the allocation will increase by the share price increment. The opposite is also true. If a business is not doing well, it will turn out to be a mistake. In that case, no need to sell. The allocation will reduce as the time progresses. This is self-correcting mechanism is based on the law of 80-20. It says only 80% of your portfolio outperformance will be made by 20% of the stock. So let the winner ride and the loser shrink. If we continue adding more and more money into the losers, we'll be watering the weeds in the garden. In this way, we are accepting that there will be mistakes, and these mistakes will not hamper the overall portfolio return. Now, does that mean that we will stop making new investment? Absolutely not. The new money would be invested, but not in this portfolio. Another portfolio is coming up based on quant process described in Magic Formula book. We will start this portfolio very soon with 30 stocks. These 30 stocks will be screened based on the criteria that has been mentioned in the little book that beats the market by Joel Greenblatt. Now, before we make any investment, I will obviously publish the complete list of the stock in the Telegram channel. If you're interested to know about the stock before we make the investment, do follow our Telegram channel. Now, before we end this video, we will talk about the stock that we have sold recently, that is Relaxo. The reason why we sold the business was pretty simple. If you try to understand, Relaxo majorly operates in the affordable footwear category. In this segment, recently the tax rate has been increased from 5% to 12%. Obviously, the unorganized player who doesn't pay the tax, they will not get impacted by this tax rate hike. But Relaxo, being an organized player, they have to bear the cost of the tax. Now, because of this tax rate hike, the customer has to pay higher price when they are buying Relaxo footwear. Of course, when you sell affordable footwear and the price of your footwear goes up, the customer may not willing to buy paying more and more money, especially when they are having option to buy it from unorganized player. This is the first reason. And the second reason is raw material price hike. Because of COVID, Ukraine-Russian war, the raw material price has gone up. To protect the margin, Relaxo cannot increase the price of the footwear, because already they're dealing with issue of the tax rate. Now, this is not a narrative only. If you see this, it can be validated with the number that Relaxo is reporting. The profit margin in last couple of quarters has been consistently decreasing. This simply validates the reason. Now, this has been happening in last couple of quarters. Then the question could be why we are selling right now. We have been trusting the management to take up some good strategy, but surprisingly, the management is only talking about the gradual price hike. We believe that the current issue of the Relaxo cannot be solved through the price hike. This is the time they need to be doing something different. Maybe venturing into the prime category of footwear, or backward integration to have a better control on raw material, or probably something completely different. We haven't found any strategy from the Relaxo management, hence we moved out of the business. Hope that gives you some level of clarity about our selling decision. That's all for today. Hope to see you in our next video. Until then, take care. Bye.